Good day, welcome to your next edition of F6 Express recording, special deductions and allowances. When we look at section 11, section 11A dealt with the general deduction formula and the specific rules that govern this section. Special deductions follow from section 11BA to 11X. Then we have 11 capital A, 11 capital B, 11 capital C, and 11 capital D, and these are meant to enlarge the general deduction formula. Section 23, however, prohibits deductions of certain expenditure and losses. Section 23B allows that a deduction be deducted only once. It also provides that no deduction will be allowed under the general deduction formula if it is dealt with under a specific deduction. Section 11BA, which has been deleted from the 1st of January 2012, brought in pre-production interest only. It has been replaced by section 11 capital A, which brings in pre-production expenses. Section 11C, legal expenses not incurred in the production of income are not allowed in terms of the general deduction formula. However, section 11C allows for certain of these legal expenses to be deducted. 11CA is a restraint of trade, which is an allowance that is paid to a person in the course of carrying out his trade as compensation in respect of a restraint of trade to a natural person, a labor broker, or personal service company, to the amount that it will constitute income in the hands of the person to whom it is paid. It is deducted over the period of the restraint or a minimum period of 3 years. Section 11D, which is repairs, and repairs are defined as the restoration of some material thing or structure by the renewal of decayed or worn out parts, not by improving it. Section 11E, a very important section, is a wear and tear allowance, which will be available if the value of any machinery, plant, implement, utensil, or article owned by the taxpayer or acquired in terms of an installment sale agreement, which means finance leases are included, and used for the purpose of trade, has diminished by reason of wear and tear or depreciation during the year, does not apply if you have allowance under section 12B or 12C. Section 11F, lease premiums, it provides for the allowance of a premium commencing in the first year, deductible in equal installments based on the period of the lease, limited to 25 years, and it is apportioned for part of the year. 11G, leasehold improvements, also if the lessee improves leasehold property, then the lessee can deduct the expenditure annually over the period of the lease or 25 years, whichever is shorter, reduced for a partial period, and this deduction can only commence when the lease improvements are complete, must be in the production of income. It may not be claimed if it does not constitute income in the hands of the lessor, and if the lease agreement is terminated, the lessee may deduct the balance of the cost not previously deducted. Section 11H, which is lessors, it is a practice to give the lessor a deduction equal to the difference between the amounts of the improvements discounted at 6% over the period of the lease, excluding any renewal periods. Section 11GB, registration and renewal of intellectual property. This allows a deduction in full in respect of expenditure actually incurred in obtaining the grant of a patent, restoration of the patent, extension of the term of the patent, registration of any copyright, extension of the term of any copyright, registration of a design, extension of registration period of a design, renewal of the registration of a trademark if such property is used in the production of income or income is derived therefrom. Section 11C, acquisition of intellectual property. When you acquire any intellectual property, if it is less than an amount of 5,000 Rand, it is deducted in full in the year it has been incurred. If it exceeds 5,000 Rand, the allowance is 5% of the expenditure per annum in the case of patents, copyrights, etc., 10% in the case of a design or other similar property, and there is no apportionment if it is less than a full year. Section 11GD, expenditure incurred to acquire a license from the government, municipality or provincial administration. It is deductible over the period that the taxpayer has the right to the license, with a maximum of 30 years if the license runs for a longer period. 11 capital D, scientific and technological research and development. You are allowed 150% of the actual amount spent. There's also an allowance for 100%, and there's a 50-30-20 allowance. Section 11I, which is bad debts. Bad debts are allowed if the debts are due to the taxpayer and have become bad during the year of assessment in respect of amounts which have been previously included in the taxpayer's income. In this case, all three conditions must be fulfilled for you to claim a bad debt. Doubtful debt allowance, although there is a very fancy formula, everyone just goes with the 25% of all doubtful debts which Revenue Services allows. Section 11L, contributions by an employer to a pension, provident and other benefit funds. The employer may deduct these contributions made on behalf of the employee to the total amount of 10% of approved remuneration. Section 11LA, shares issued by employers in terms of Section 8B, limited to 10,000 Rand a year. You will look at the market value less any amounts paid by the employee. Section 11M, all deductible annuities paid to former employees and their dependents, retired employees, former employees and former partners. 11O, scrapping allowance. The requirements are: the allowance is available at the election of the taxpayer for qualifying depreciable assets that were alienated, lost or damaged during the year of assessment. Life insurance premiums. The employer qualifies for the deduction on premiums paid on insurance policies if the employer is the policy holder and the policy is taken out on the life of a director or employee only until the 1st of March 2012. Section 11 capital A, remember we said when we spoke about 11BA that it has been replaced by 11A, which is a deduction of all pre-trade expenses and losses, which are not allowed by any other section as long as they are for the purpose of carrying on that trade. Then we come to our capital allowances, which is Section 11C. Manufacturing equipment allows an allowance on actual costs of any qualifying machinery, plant, implement, utensil, article, ship or aircraft brought into use on or after the 1st of March 2002. New and unused, the allowance is 40% in the first year and 20% in each of the subsequent years. Then we go on to describe a process of manufacture, which must be a complete process. There must be an essential change of the material. The process need not produce the end product, and the process of manufacture is the most important definition in inverted commas that we have. Then we go on to section 11b, which is for farming and biofuels, a 50-30-20 allowance. Only available is if the asset is brought in to use for the first time by that taxpayer. It does not have to be new and unused. It has to be new and unused by that taxpayer, and there's no apportionment. Section 11E, small business corporations. It applies to plant and machinery owned or acquired by a taxpayer under an installment credit agreement, brought into use for the first time on or after the 1st of April 2001 for the purposes of the taxpayer's trade other than mining or farming, and the deduction is 100% of the cost in the year it was brought into use with no apportionment. A small business corporation is defined as any corporation or private company, the entire shareholding of which is held by natural persons. Gross income does not exceed 14 million. None of the members or shareholders holds shares or interest in any other company. Not more than 20% is received of gross income is received by passive income, and it must not be an employment company. Then we go on to our section 13 building allowances. Initial allowance of 17.5% if the building was brought into use before the end of December 1989. Then we look at annual allowances, and all these are for industrial buildings. The new one is section 13 Quin, which is a commercial building allowance applicable to any building or improvements contracted for on or after the 1st of April 2007, mainly for producing income. The allowance is 5% per year and not apportioned for part of the year. Section 13 Ter is residential building allowance. An initial allowance of 10%, annual allowance of 2%, which was replaced by section 13 SEX on the 21st of October 2008, which reads that it has to be a new and unused residential unit solely for the purposes of trade in South Africa, at least 5 residential units. And if you are providing low-cost residential units, then you get a different allowance to the normal. If you are just an ordinary residential unit, you get 5% per year. If you are low cost, you get an additional 5% per year, and there is no apportionment for part of the year. Section 13 SEPT, which is low cost residential units on loan account. Employers will be allowed tax relief for the sale of employer provided low cost residential units to employees. Low cost housing is defined as a standalone unit with a cost not exceeding 200,000 Rand and an apartment not exceeding 250,000 Rand, as long as the owner does not charge rentals of more than 1% of the cost. The allowance is a deduction of 10% of any amount owing to the employer or taxpayer with the maximum period of 10 years. The general recoupment provision. If you sell an asset that you have claimed any of the deductions that we have dealt with and you recoup the amount, you will show this recoupment in your gross income. The last one in this section is an assessed loss, and an assessed loss is an amount which the deductions admissible under Section 11 exceeds the income from which they are so admissible. Balance of assessed loss means the excess of any assessed loss incurred in the carrying on of a trade over the taxable income from that trade and from any other taxable income. That is the end of this recording. Thank you. See you at the next recording.